All right, today we're jumping right into a fascinating and honestly pretty high-stakes intersection of two completely different worlds, family law and federal taxes. We're talking about the custodial waiver revocation. This is a process where thousands of dollars in tax credits can hang in the balance and where a state court's order can go head-to-head with the really unbending, rigid rules of the IRS. Let's get right into it.
So here's the plan for our deep dive. First, we're going to tackle that fundamental conflict between federal law and state courts. Then, we'll pull apart the single most important document here, Form 8333, and really dig into the surprising power a parent has to just take back their claim. After that, we'll look at the actual money at stake, walk through the exact steps for a perfect revocation, and finally, we'll look at the key court cases that really set the ground rules for all of this.
Okay, so here's the absolute core conflict you have to get from the very beginning. A family court judge can write up a divorce decree that seems crystal clear. Parent A gets to claim the child. But the IRS, you have to imagine they live in a completely different universe, and they're playing by a totally separate rulebook.
And this is where that power struggle really comes into focus. Look, a state court can absolutely enforce its own order. It can find a parent in contempt, it can levy penalties, no question. But when it's time to file taxes, the IRS just doesn't care. Their rulebook, specifically Internal Revenue Code Section 152E, is explicit. They do not read or interpret state court orders. They are laser-focused on one thing and one thing only: who has physical custody, and is there a specific, properly filled-out federal form? In this arena, federal tax law is king, period.
This didn't just happen by accident. The IRS very intentionally changed its rules over time to get out of the messy business of refereeing family disputes. Before 1985, they used something called a support test. It was a total administrative nightmare trying to figure out who paid for what. So in 1984, Congress gave them a simple, bright-line rule. The parent the child lives with for more nights, the custodial parent gets to claim them. Simple. Then, after 2008, new regulations cemented this, basically saying that for any recent divorce, only an official IRS form, not the decree itself, could transfer that claim. The whole point was to achieve absolute certainty.
So all of that brings us to the single most important piece of paper in this whole discussion, Form 8332. For any divorce decree written after 2008, this form is the one and only way the IRS will ever recognize the transfer of a child tax claim from the custodial parent to the non-custodial parent.
And here it is, the form itself. Now, if you look closely, you'll see it has three very distinct parts, and each one does something very, very specific. We're going to break down exactly what each part does right now, because the differences between them are absolutely critical.
Okay, part one is the simple one. It's basically a one-and-done release for a single tax year. The custodial parent signs it, hands it over to the non-custodial parent, and that parent attaches it to their tax return for that specific year. And once that return is filed, boom, the deal for that year is done. It's locked in.
Now, part two. This is where things get a lot more interesting and a lot more complicated. This is the forward-looking waiver. A custodial parent can use this to release their claim for a bunch of future years, maybe 2026 and 2027, or even for all future years. And because life happens and circumstances can change dramatically, it's this forward-looking promise that can later be revoked.
And that brings us to part three, the revocation. This is the power play. This is the specific tool the tax code gives exclusively to the custodial parent, letting them unilaterally cancel that promise they made for future years. This is their statutory right, and it's the entire mechanism we're focusing on.
I really want to hammer this point home. Revoking a prior waiver is a unilateral right. What does that mean? It means the custodial parent does not need the other parent's permission, they don't need their agreement, they don't need their signature. This is a power granted directly to them by Treasury regulations.
And this isn't just an opinion. The authority comes straight from the source, Treasury Regulation 1.1524-E3. It says it right there in black and white. A parent can revoke the waiver simply by giving written notice to the other parent. And the IRS will honor a properly executed revocation even if it completely contradicts what a state divorce decree says.
But there's a huge catch. There is a critical timing rule, often called the next year rule. A revocation is always prospective. It never works backwards. So if a custodial parent sends that revocation notice anytime in 2025, even on December 31st, it only takes effect for the 2026 tax year and all the years after that. The non-custodial parent still gets to claim the child for 2025. And this is by design, right? It prevents last-minute surprises and gives the other parent a chance to adjust their tax planning.
So you might be wondering, why go through all this trouble? Let's talk numbers. What's actually at stake financially when a custodial parent decides to execute a revocation?
Well, the big one is the child tax credit. Right now, that's worth up to $2,000 per child. And here's a key technical point. Even though the dependency exemption itself was zeroed out by recent tax law, that exemption is still the legal hook you need to claim the credit. So revoking the waiver can literally shift thousands of dollars in tax benefits from one parent's pocket to the other.
Now, this slide illustrates a really critical concept called benefit bifurcation. See, revoking Form 8332 only pulls back the benefits that are tied directly to that dependency claim, like the child tax credit. But other major tax benefits like head of household filing status, the earned income credit, the dependent care credit, those are all tied to physical residency, where the child actually lives. Those were never transferred away in the first place, so they always stay with the custodial parent no matter what.
Okay, so let's get into the real practical application. How does a custodial parent actually execute a revocation that is totally flawless, one the IRS is going to honor without any issues? You have to understand, the procedure here has to be followed to the letter.
There are 6 steps, and they are absolutely non-negotiable. 1, verify you are in fact the custodial parent based on that number of nights test. 2, time it right. Send the notice in the calendar year before the tax year you want to get back. 3, use a clean Form 8332 and fill out only Part 3. 4, and this is maybe the most important, send it via a documented method, like certified mail with a return receipt. You need proof. 5, attach a copy of that completed revocation form to your own tax return every single year you claim the child. And finally, 6, if the other parent claims the child anyway and the IRS flags it, your attached form is your knockout punch. It's your proof that you have the superior claim.
The actual language in the regulation says you have to make reasonable efforts to provide actual notice. Well, the burden of proof is on the person doing the revoking. That's exactly why you can't just send a text message or make a quick phone call. That certified mail return receipt is your ironclad evidence. It proves you met your obligation, and it's your absolute best defense if there's ever a dispute. Now, this really strict form-over-substance approach from the IRS, this isn't just their own internal policy. It has been backed up again and again by the U.S. tax court. Let's take a look at the court cases that prove it.
The Miller case really set the tone for the court's view on this. The judges basically said that the entire point of the law change back in 1984 was to provide certainty for the IRS. And to get that certainty, the rules have to be followed strictly. You need that signed, unconditional written declaration. There is simply no room for interpretation or ambiguity.
But the real knockout punch, the seminal case, is Armstrong v. Commissioner. It definitively ruled that a state court order, especially one with conditions, like you can claim the child if you're current on child support, is not a substitute for Form 8332. The IRS is not going to play detective to see if those conditions were met. The implication here is just profound. If a custodial parent executes a proper revocation, their claim is superior for tax purposes, full stop. The non-custodial parent's only option is to go back to state family court and sue for a potential breach of their divorce agreement. They can't fight it with the IRS or in tax court.
And all of this leads us to our final critical thought. This system clearly gives a tremendous amount of power to the custodial parent. So the big question for any professional working this space is, how can a non-custodial parent who might be bargaining for that tax credit in a settlement protect themselves? Well, the answer isn't to try and fight the IRS. You'll lose. It's to use preventative legal strategy. It means drafting settlement agreements with very specific clauses, things like liquidated damages that would financially penalize the revoking parent if they break the agreement. It shifts the fight away from the tax world and puts it back in the contract world, which is exactly where it belongs.